Hi, today we're going to be discussing the Budget Reconciliation Bill. And what does it mean in terms of you and your taxes? First, IRS's budget gets increased by $80 billion, and it primarily goes to enforcement. What does enforcement mean? It means that the IRS will be hiring more revenue agents to do audits, more criminal investigators to do criminal investigation of crimes, and more revenue officers to collect the tax. Now, the IRS's audit rate dropped. From 2010, it used to be 16%, and it went down to 2% for high earners. What does that mean in terms of you and audit risks? Well, IRS is primarily focused currently on three factors. Number one, if you're a high earner and you're a non-filer, this significantly increases your audit risk. A high earner, IRS is identified as anybody earning over $100,000, but it's typically we've seen $200,000, $250,000 or higher. A non-filer, we're not looking as a single year not being filed. We're looking at least a couple years or more. We have some clients who haven't filed tax returns for 5, 6, 7 years, significant amount of time, and they haven't reported that income, and they're high earners. So IRS, if you notice, IRS does have record of how much income you're earning. If you're a W-2 wage earner, that gets reported. The W-2 does get filed, and IRS has a record of all your W-2 wages. Any 1099s you receive as a self-employed individual, that also gets reported to IRS. And thirdly, any K-1s that you've received from your own company or from other companies that you invest in or are partner in, those also get reported to IRS. So if you haven't filed tax returns for a couple years, definitely encourage you to get your returns filed. Make sure they're accurate. And if you want to make sure they're accurate, most important is the income should be accurate. And the way to do that is to contact IRS, either call them, or you could log into your account by verifying some information, create an account with IRS, and downloading a transcript called a wage and income transcript. And this transcript is a report by year of all the income that has been reported to the IRS. So you can give that to your CPA or tax preparer, or if you're going to prepare it yourself, that is your starting point for the income. Some income doesn't get reported to IRS. So for instance, if you earn less than $600 from a source, they won't issue you typically a 1099. And sometimes when a company or an entity should be giving you a 1099, they still don't file them. Happens all the time. So try to keep track of the income, but if you're unable to do that because it's been too long, at least contact the IRS and get that transcript. That's your starting point on the income side. The expenses, we encourage our clients to go look at bank statements and credit card statements. You can get some expenses there, and these are business-related expenses. We're not looking at personal. If you're self-employed, you're going to want to put these two things together so you can file a tax return. The next factor that definitely heightens or increases your risk of an audit is having a cryptocurrency account. You'll notice that the 1040 return started having requiring you to identify whether you have cryptocurrency. There's a checkbox on the top third of the form on the 1040, and it asks whether you have a cryptocurrency account. Now, we've had some clients recently that have a decentralized cryptocurrency account. And what that means is they're trading cryptocurrency, which is basically digital coins, not through an exchange, not through Bitcoin or some other exchange, but directly between two people, between themselves and somebody else. And there's not really a ledger. There's no way to keep track of that, which is why IRS is very concerned, because then you're really off the grid and they don't know how much money you're earning and they don't know what kind of transactions you're involved in. So IRS is definitely focused on that. And the new 1040 forms, whether it's going to be for 2022 or after, will now require you to identify how much income you're earning from cryptocurrency or you're being paid with cryptocurrency and what's the source of that income. So something to keep aware of, because you're going to have to start keeping track of that. If you have a centralized account, such as through an exchange, through Bitcoin, they do keep a record. You should be able to get a transcript of your exchanges or your trades and calculate the gains. The last thing that IRS is really focused on that also increases your risk of an audit is if you're self-employed. Self-employed people, it's a little bit harder. It's not like you have a W-2 job and you get a paycheck. There is income coming in. There's payments going out, and unless you're filing the proper forms or you're receiving 1099s from other individuals, it's really hard for IRS to identify the amount of income you're earning and what the expenses are. What's the correct taxable income? The next thing that this bill does, it also imposes a 15% minimum corporate tax. Now, don't worry, this mostly applies to C corporations that have $1 billion or more of income. It's estimated only 200 companies approximately will be affected by this bill. But it gets a little squirrely. The AICPA has sent letters to Congress indicating this could result in some confusion and inconsistent results. Why? because the 15% corporate minimum tax applies on book income, not tax income, tax return income. There's two different things. So your book income is based on your books and records, what's on your profit and loss statement. Now, when that gets reported on a tax return, it could be a very different number. Your book income could be reduced by depreciation and other characteristics. Net operating losses, there's a bunch of other things. So your profit loss statement will report your net income for business purposes, but for tax purposes, it could be a very different number. And these could produce inconsistent results. The last thing that this bill will do is it'll impose a 1% excise tax on stock redemption. So if you have a corporation, either you own it, or you have a partner, or you have other partners and many investors in the company, and the company buys back your stock, this bill potentially could assess a 1% excise tax on the stock redemption. So these are some important things to keep aware of. The bill has not passed the House. It has passed the Senate. We're waiting to see what happens. But keep tuned. And if you have any additional questions, feel free to contact us. My name is John Milikowsky. I'm the founder of Milikowsky Tax Law. I hope this video was useful.